The only thing that concerns me is if they did a really big collapse, silver has a higher beta. When the Fed spoke and we had the interest rate cut that was pretty much priced in, and we got the correction in the gold silver market, gold went down about 1.1 or 1.2%, silver goes down 4%. So it's always a higher beta. If we had a very high drama, contagion, collapse, and acceleration of the theme of this recession, what you could get is you could get a short-term spike in the gold to silver ratio. No one's talking about that. Everyone expects this only to go down. In the end, I believe it does. But we haven't seen the histrionics or the problem reaction solutions vibe they're going to pull. Whatever they pull is going to be bigger than CV19.
The precious metals market demonstrated remarkable resilience today, with both gold and silver posting substantial gains that more than offset midweek weakness. This performance extends an impressive 5-week rally that has captured the attention of investors positioning for anticipated Federal Reserve policy shifts. Technical analysis of the gold-silver ratio shows it recently lost support at its 200-day moving average, suggesting further downside potential toward the 80-to-1 level. This technical breakdown could foreshadow a continued squeeze in the silver market in the coming months. Based on market fundamentals, the gold-silver ratio is a crucial signal. According to renowned expert FrancisHunt, a break below 79 will trigger a strong pivot to silver, which he says could eventually plunge to single digits in a crisis. However, he warns that silver's higher volatility means it can fall much harder than gold in a dramatic collapse, just as it did in 2020. Price pullbacks of 15% or more can occur rapidly, even in a bull market, strategists said, adding that holding the metal requires elevated risk tolerance. In his analysis, FrancisHunt argues that the real value lies not in gold or silver, but in platinum, which he refers to as cheap gold. He notes it's 17 times rarer than gold and believes its price could double or triple in the next cycle, and he's personally been buying platinum maples for vaulting. Overall, he predicts fortunes will be made during this turbulent monetary reset. While the crisis may sound bleak, Hunt stresses that money never disappears. It shifts, creating major opportunities in gold, silver, platinum, miners, and even select cryptos for those who position themselves wisely. Before we dive into FrancisHunt's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
The key valuation metrics to watch is the gold-silver ratio. There's two possibilities. We haven't ruled out either. I would like for it to be that we get rich quick and we just spill here. For us, we need to run that 79 on the gold-silver ratio and ideally the 73. The minute we trade through 79, I'll already be on red alert and I'll be pivoting and only buying silver at 73. And I think you can go single digit on the gold-silver ratio, like a 9.99 or any number between 1 and 9.99 in an extremist moment. That is possible. The only thing that concerns me is if they did a really big collapse, silver has a higher beta. When the Fed spoke and we had the interest rate cut that was pretty much priced in, and we got the correction in the gold-silver market, gold went down about 1.1 or 1.2%, silver goes down 4%. So it's always a higher beta. If we had a very high drama, contagion, collapse, and acceleration of the theme of this recession, what you could get is you could get a short-term spike in the gold to silver ratio. No one's talking about that. Everyone expects this only to go down. In the end, I believe it does. But we haven't seen the histrionics or the problem reaction solutions vibe they're going to pull. Whatever they pull is going to be bigger than CV19. And you know what happened there. Gold fell, but not by anywhere near as much as silver. Silver actually fell to $11. You couldn't buy it for $11. I think the lowest you could buy it was 14. But it is a much higher beta. And that was when this spike occurred here. So depending on what it is, depending on levels. So right now I buy both, and I continue to stack both, and platinum. When you run the 79, I'd start waiting to much more silver and then only silver at 73. That's my gold
So platinum is a better buy right now, better than silver.
I consider them pretty equal, but I think platinum slightly outperforms in the long run, but it's been slower in the last few days. I see platinum as a cheap overvaluation of gold. When this entire move is over, I expect the platinum price to be higher than gold. And at the moment, platinum is around the 1400 mark. So I see platinum as cheap gold. But I also see silver as kind of cheap gold, but it's a lot heavier. Everybody thinks because silver is the lower price point, that it can go up more. It's kind of like buying a shitcoin in the alt market versus buying Ethereum, for example. But this is a very good breakout. We're at the second interim here. That's why we're pausing. And there's a target of 1640, and then there's a target of 3711, 3000. That's much higher up here. So I'm seeing platinum at the end of its final moves, wherever gold is plus possibly 30%, it could even be double. You've got to understand the following. There's about 20 people argue about this, but if you look at the total platinum, put it into Grok, there's about 20 times to 30 times more gold production in a year. It might even be worth just doing live with you, and you can see me do it. Total platinum production, let's just do it for you, and total gold. Total platinum annual production. Most of it's coming from South Africa and Zimbabwe, Southern Africa, the rest coming mostly from Russia and a very small amount. Metric tons, 192 of which 143 of that comes from South Africa. 192 tons, that might sound like a lot. It's absolutely nothing. Now if we do gold, let's say now do gold, 192 tons, 3,250. Allow me to do the maths for you there.
Mm-hmm.
China being the largest at around 375, 380. There is 17 gold ounces found for every ounce of platinum found.
Wow.
That's how rare platinum is.
Yeah.
Then you multiply by around about 8, between 8, silver. So platinum is 135 times more rare than silver. 135 times. You take the current silver price times by, let's say it's 42, round number, 5687. If you're talking rarity, platinum should be 5,687, 57.
Very interesting.
Buy it for 1,400 right now. We'll go back to that chart and confirm that. Well, you won't get, it's difficult to find, first of all, and you won't get it, there we go, 1385, 1386 today.
Yeah.
So compared even to silver, it looks a deal, but it will be a much thinner market if you have to sell. So I'm not saying you should be dumping all your silver and only getting platinum. Sure. Other countries will, some of them are charging VAT. Some charge VAT on silver and platinum and treat it as industrial. Other places not. So it also depends where you are. So if you're in the Western Hemisphere, you can get platinum without VAT. And to me, it's worth getting. And eagles cost a lot more for some insane reason. So you get pricing disparities than maples. So I've been buying maples in platinum through our connecting and vaulting that. So I think those do a 3x on, or a 2x possibly on what gold does. Listen, it's an important challenge. This is what's coming for you. It sounds doomer. That crisis, Chinese symbol, means crisis and opportunity. There's huge opportunities when you have overnight fortunes can be made in collapsing markets and pumping markets, because money doesn't die. It's like energy. It leaves one place and one area collapses and it reforms and goes into other places, which surges. So there will be select opportunities in the status crypto tokens. I don't love them. I want the money. I'm pragmatic. There's huge opportunities in gold, which represents truth, silver and platinum, and their miners.
In the interview, FrancisHunt underscores that the Nasdaq's record highs are a mirage. He warns that the U.S. is in a debt-based collapse, facing a deep recession with persistent inflation. The proof indicates the bond market is crumbling and the dollar is collapsing against other currencies. For Hunt, this isn't a conspiracy, it's the logical consequence of decades of debt and trade deficits. According to a Bloomberg News report, Ray Dalio noted that the US will spend about $7 trillion this year and earn only $5 trillion due to interest payments and rollover of maturing borrowings. This means you have to sell $12 trillion in debt, he reportedly said, without giving a time frame, during the Future China Global Forum in Singapore. Moreover, FrancisHunt states that the government's spending is funded with inflationary debt, and you, the taxpayer, are paying for it. The dollar is rapidly debasing against gold, which remains the only reliable measure of value. What makes today's rally particularly noteworthy is that it materialized despite facing moderate resistance from a strengthening dollar. The US dollar index climbed 0.29% to reach 97.647, typically a headwind for dollar-denominated commodities like gold and silver. However, the precious metals' ability to advance in this environment underscores the strength of the underlying bullish sentiment. Let's get back to the interview.
I don't see tech right now in America as a safe haven. Many will say, but, NASDAQ, but all-time high, but all that other stuff. I would be very cautionary. There's always a time to take profits. So what you're actually seeing, if I carry on from the Powell part, is you've got a major recession and you've got increasing prices coming that still have to work their way through the supply chain, which is inflation. So in the same environment where people are being laid off, jobs are being laid off, they're now acknowledging that the labor numbers they were selling you and hiding, we trust the data. They wanted to keep interest rates high. They needed the debt to devalue. The debt fell 55%. TLT, the ETF for 20 years, we've shown that chart with you before. If anyone wants to see it, they can look at it again. At the peak, March 2020, 55%. We said the currency falls next. Who's been the weakest currency this year? By far, 15% to the euro. It's in a trend that's broken down out of, if you do USD euro, the other way around, and that's again a chart, everyone getting excited about the Dixie might break. There's two major national blocks that America runs a huge deficit with. It's Europe and China. I'm sure everyone understands that. And again, if you look at the euro, technically on the USD zero, and I think I have that very chart up. Let me just pull it up and show you. You will see that you have broken. You don't have to wait for the Dixie. The euro is 52% of that. This is the break here. That is US dollar in euros. You have reversed a rising wedge move that you could argue you fell into for the first time in 2004. From 2004 to 25, literally you're talking a 21-year plus. Largely, although there's been ups and downs, the dollar has been making higher highs and higher lows, largely. So if we simplify the trajectory of this chart, it's something like this. And now you have broken out of what is a basing, descending grind line that you've held. Last time you touched was 21 and 2008. 21, and you've stayed above it. You've broken out. That is 52% of the dollar index and the most important trade deficit, which is why Trump is now saying we won't spend for NATO. Europe must grow their military, not us, because they can't afford to anymore. You are in a debt-based collapse. A bankrupt nation is in a debt-based collapse. Your question was, how do people position? You have to recognize you're going to have an increase in your cost of living with inflation. So now everybody is taking high fives they call the recession. They all started calling it in the last 2 weeks after they heard the revision number. We've been calling it for 2 years. Now they're telling you how clever they are. It's all a recession. There can't be any inflation. In fact, the inflation is going to be well under the Fed's number. They're meeting it or beating it. You have David Hunter saying that. You have Zeberg saying it. A lot of people. No. The next big thing is the inflation. They cut rates at 2.9%, which is a fiddle and a massive understate to get it under 3, when their target is 2. They have a stock market at an all-time high, and they're cutting rates. Why are they doing that? Because the consumer, they're bouncing between two evils. A crushed consumer. Remember, the US economy is the twisted balloon. Like, think of the clown guy that makes toys for your kid. He blows that long, thin balloon and he twists it in the middle. One half is being deflated. That's the consumer and the man in the street. The half that's making out like bandits is statist government debt spending, or with Palantir, Amazon for server farms, Microsoft for AI server farms. Now the most useful farm is the server farm. People are forgetting about food. Server farm is the farm. Now, you're doing all of this so that you can ask Grok, what's a prime number? All of this nonsense. And why is my electricity bill so expensive? They're actually putting these farms in your area and pushing your net across the grid costs up, and you're part subsidizing these server farms that are being put to you so that you can ask Grok, why is your bill so high? That's what's going on. The statists with the corporate fascists of those companies I know are building a surveillance, server farm, biometric, digital grid that's going to be lowered over you. Your tax money is paying it. They are overspending on developing that because they're in a hurry. They're putting that debt against your name as collateral. And that over expenditure on debt is inflation. So Milton Friedman, take the quote. Any government expenditure beyond its income is inflation. It's dilution. Because you've created new money. When you do a debt instrument and you issue a debt instrument, it's like when you buy a house. You're not getting given somebody else's savings. They are saying, here, we're going to create new money. Here's 500,000 for you to go buy a house. And there's now a debt instrument associated with that you owe an interest payment stream to against that asset. So every time they are over-expending, go look at that deficit that I was showing you, the 2023. It's far worse today. I wish I could find the 24 one. There's less, you're spending more than your income. So it's getting worse, and it can only do one thing. It's going to debase the dollar. Why the dollar is the worst performer this year? The others are garbage and underperforming. Dollar is double garbage at the moment. Gold has been and shown you the debasement of the dollar. So if we do USD XAU, that's your gold dollar. That's how the dollar's doing, if you want some history. That's your loss in buying power right now for holding dollars in a currency.
It's
a horrible chart. And here was your USD euro, which is actually showing the rising wedge that I was referencing earlier. So there's the two trade deficit nations, are the China and Europe, the main ones. You know, the rest of the Dixie is made up by the British pound, the Japanese yen, which is made to be weak because it's the funding money for the casino of America. It's a wholesale funding conveyor belt for speculating in America.
For investors and market participants, the current setup suggests that the precious metals rally may have further room to run, particularly if the Fed validates market expectations. While no single metric can provide perfect investment guidance, the gold-silver ratio offers a valuable perspective on relative value in the precious metals space. By combining ratio analysis with fundamental research and sound risk management, investors can enhance their gold investment strategies and improve long-term results. As the dollar weakens and debt mounts, will investors recognize the urgency to pivot into precious metals before the monetary reset forces a revaluation? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.